All righty, traders. Good afternoon, good morning, good evening, and welcome to the live broadcast. Trust everyone is doing well. Hey, let's see. Happy New Year to everyone. Hope you guys had an awesome New Year and looking forward to 2025. I am certainly excited and pumped up for 2025. We've got a lot of good stuff that we're going to be talking about today. I appreciate everyone being here in this live broadcast here on this beautiful Tuesday morning. And so we're going to go ahead and talk about a couple of things here. And there's one thing that I've understood through the years, and that is, of course, that every trader has different type of risk appetite. But the one thing that traders like to follow is, of course, where the market's trending. As soon as the market goes against them, it gets them into a position where they feel really uncomfortable and they start looking at all negative aspects to why they should be out of that trade. And sometimes I can understand why if you don't understand the market direction. Well, we're going to give you guys a little bit of input as to what's going on, how we can help you with identifying market bias, and of course, how to be able to get into plenty of trades. Now, we're going to talk about that right after this. All righty, traders, welcome back. All right, so quickly here, I want to go ahead and say that there are a couple of things that. By the way, good morning, Cameron.
Good morning.
Good morning. Yeah, Cameron's joined me here in this live session here. I wanted to bring him in here because he's going to be talking about a couple of things that he's going to be doing throughout 2025 that he's going to be involved with, and he's going to be your go-to guy if you choose. And again, only if you choose. We only want traders that really want to go ahead and, are passionate about making money, number one. Number two, getting a good return for the investment. Number three, would be just really getting involved in where the money goes. So this is the thing. When you look at the markets, right? There's a couple of things that most traders have to understand, right? Number one, and trading can be complicated, but this is how it is. Number one, you got to look at sort of risk on, risk off. All right, risk on, risk off helps us to also understand where the money's flowing to, right? Which currency, which asset money's flowing to. Now, when we talk about risk on, risk off, what we're talking about is the dollar either strengthening or weakening, or the Dow either strengthening or weakening, or the DAX either strengthening or weakening. Now, if we look at the Dow, for instance, if the Dow is rallying, then we understand that there is a risk on appetite, which means that investors are getting excited about the market, and they're being very optimistic, and therefore they're risking money in risk assets like the stock market. All right. So if the stock market rallies, we normally see money flowing out of the dollar into the stock market. So dollar tends to fall. All right. Now, we've seen on occasion where the stock market has been rallying as well as, of course, the dollar's rallying. And we've seen this and we're like, what's going on here? And that normally is a flight to safe haven. But this is the thing right here. When you see the dollar dipping because stock market rallying, we could refer this to a risk of appetite. Now, there's four currencies that would go ahead and rally with the dollar. The pound would rally with the dollar. Sorry, not the dollar, my bad. With the stock market, the pound would rally with the stock market. The Canadian dollar would rally with the stock market. The Aussie dollar would rally with the stock market. The New Zealand dollar would rally with the stock market. So those four currencies would get stronger against its counterparts. Now, the pairs that lose ground, or the currencies that lose ground, would be the dollar if the stock market rallies. The dollar lose ground, the euro would lose ground, the Swiss franc would lose ground, and the JPY would lose ground. They are all referred to as risk-off currencies. So traders, so when we trade, you got to look at, are we in a risk-off, risk-on sort of environment? And if we are, then this is what we'll go ahead and do. We'll go ahead and take a look at, all right, things like this. we were looking at the market. Is the Dow bullish or bearish? All right. And when we establish that the Dow is bullish or bearish, we can then establish what type of trading environment that we're trading. So here we see right here, we got the Dow this morning. All right. This morning, we have the Dow showing that we are bearish. And so we now look at a couple of things. We look at, is the market showing the trend being bullish based on the Dow? Is the trend bullish on the Dow? Sorry, in this case, the DAX. Is the strength, is the momentum strong or weak? In this case, it's strong, bearish. All right. Is the volume bullish or bearish as well? Now, based all of that, we then go ahead and establish whether we're trading in a risk-off trading environment. We want to understand if the risk is risk on, risk off, all right, or at least if we want to understand if it's risk on, risk off, but also we want to understand, is it that we're trading a risk-off trading environment? Now, if that's the case, then this means that certain pairs like Aussie Swiss, we'd be looking to buy. Aussie JPY, we'd look to buy. Aussie US dollar, we'd look to go ahead and buy. And so we get certain pairs like the Euro Aussie, Euro CAD, Euro Pound, we'd go ahead and look to sell. All right. Now, we're only looking for short-term profits. Okay. We're only going to chase after short-term profits. But this is the thing, traders. Once you understand that you have a certain environment that you are trading, then you know that you can go ahead and say, if this is the trading environment that I'm trading, then what I can do is I can go ahead and look for, this thing's not showing. Hang on. Why is it not working here? Oh, I know why. Because I got this thing wrong. There we go. All right. So what we'll do here is we'll look at this, and then we'll go to the pairs. Like as an example, the DAX showed that we're showing that based on the DAX movement, we're looking at the Euro Aussie dollar to be bearish. We're looking at US dollar CAD to be bearish. All right. So if US dollar CAD is bearish, and this is the start of the London market, right? The London market indicates that we have a bearish. What we're going to do is we're going to go to the actual chart, and we're going to take a look at the chart, and we're going to establish here on the US dollar, the US dollar CAD, we're going to establish what's our bias, right? We're going to go ahead and say, all right, well, if that's the case, then what is our bias on the US dollar CAD? Because if it's indicated that we should sell the US dollar CAD, we have to want to trade in the right direction, right? We want to trade in the direction of the bias. And so in order to be able to understand where the bias is, we've developed something that's going to be very useful, which means, traders, if you go here and you look at what we call this is called our smart entry AI. And what this does is it identifies the bias for you. So what it does is it says, all right, US dollar CAD, there it is there, US dollar CAD. The bias currently right now is still bullish. Okay, so we got a bullish bias. And so if we got a bullish bias, then that means, traders, that we probably don't want to go ahead and start looking for a sell yet on US dollar, right? On US dollar CAD, right? So now what we do is you go, okay, if we can't trade it, then what we want to look for is there short opportunity? So the bias may be bearish. Now, this is something that you need to understand. Okay. I want to show you something here, and this is good education right here. If the market shows that we have a big bullish candle that confirms that we have a bullish bias, as an example, US dollar CAD, but the market does something like this, right? Where it pops a candle over here. Now the bias is still bullish, but this candle right here is indicating that we have, and I've spoken this before inside the live sessions. I've spoken this before where we look at the market to range, right? Accumulation, then manipulation, and then distribute, right? So when we look at this as a accumulation, Number 2 is manipulation. And now we're looking for distribution. And distribution would go back to the bottom of the range here, which means that price is going to go back down to this area. So though the overall bias is bullish, could we still sell against the US dollar CAD? Well, the answer to that is yes and no. Yes, if you don't mind trading against the bias, and you understand accumulation, manipulation, and distribution, and you have got confirmation of the market actually moving into distribution. I'm going to go into that in a minute. So you have your two options. You have an option to say, hey, listen here, I'm only going to trade in the direction of the actual bias. Now, traders, I want you guys to stick around because I'm going to show you how our smart entry AI is going to not only be able to help you identify the bias, but also go ahead and identify where our actual signals. For those that are watching or following our signals, you're going to be able to understand and know where the signal is at all times, which means if we're long, if we're short, if we've got multiple positions in, what our break-even point is, all of the information you're going to know through the EA. The EA, which is our smart entry AI, is going to be able to show you all of that so you can make a quick decision as to what you're going to do, whether you're going to be buying or selling on that particular pair. Also, you're going to be able to make a decision and say, well, I'm not going to trade the first or second entry point. I may trade the third or fourth entry point. A decision you can make as well. I'm going to give you all of that information in a minute. So hang on towards the end. Now, is it me or is it my camera? Is my camera frozen up a little bit yet, Cam?
It looks like you're frozen.
Looks like I'm frozen. Yeah, let me see if I stop it. Let's try that again. Doesn't look like it's coming back. Let's see if I use this. It's not the best option, but at least my camera's working. Let's try it back again. There we go. All right, do apologize for that. All right, traders, listen here. Hopefully you got this so far. Now, again, I said hold on to the end. I'm going to show you guys how this can be so useful to you and how you can get so many trades. But also, traders, I'll also understand that traders want to be able to say, hey, enough is enough. If you're holding on to positions, let's say you've traded a certain pair and you're trading in a direction, and it gets to a certain point. I understand that traders want to say, big dog, I'm done. I want to cut my losses and I want to reset without holding on to long-term positions, right? In 2025, those long-term holds are done. We're done with that, right? This is going to be in and out the market, making our profits. Listen here, if you go back into 2021, 2022, 2023, and even a little bit of 2024, all right, we have a lot of positions when the markets are actually consolidating and creating good ranges. We're making plenty of pips. And then we have these breakouts, maybe 2 to 3 times a year. We have these breakouts where you're holding on to positions a long period of time. And traders have already shared with me, big dog, the swaps are too tough. There's too much swaps. There's too much this. There's too much that. And I totally get it. And this is why over the last 12 to 6 months, we've been working on making some changes to our risk management, not necessarily the strategy itself, because they generate a lot of flips. It is really looking at the actual risk management approach to our strategy and how we're going to manage the risk. So let's get into the scenario. We're talking about the US dollar CAD. So if we're looking at this, we have accumulation, we have a manipulation. Now we want to confirm distribution. Now, the bias is confirmed still bullish. I want to just go confirm that, right? And I'm going to tell you something right here, that the bias is confirmed bullish, okay, until this candle, or at least a candle, takes out this low right here, all right? When the market takes out the low at 42.10, only then will we confirm that price is in a bearish bias. So we still, despite of this bearish move, now, traders, this doesn't mean that there's no opportunity here. If I go now to a daily time frame and I take a look at the daily time frame, when we establish that price has gone ahead and confirmed that we got equal highs over here, and then the daily candle, look how the market closed out yesterday, below the daily candle. So when that happens, we have now an intraday bearish bias. So although the overall bias still remains bullish, we're now starting to see that price is confirming what? It's confirming accumulation, manipulation, but in this case now we've got equal highs, not manipulation, equal highs, and now we're looking for distribution. And what we've done is we've gone into the lower time frame to confirm that. And so we can trade this small move right here. So when you go back to the Dow, the DAX, and the Dow DAX indicates that we're in this risk on, risk off environment, and you've got a signal that says, hey, you can sell US dollar CAD. You don't have to wait. You just say, all right, let me go ahead and see if we've got the bias right. Okay, the bias is still bullish. Now, is the intraday bias bullish or bearish? And based on yesterday's close, we got a bearish bias. And so with that, we now look to go ahead and sell in the short term. So if you take this information, you go down to your 30-minute time frame, and you take a look over here. Here is the this is at 7 o'clock this morning. Then as we go to the morning session here's 3 o'clock. And you take a look at 3 o'clock this morning as an example. This is 666. This is 4 o'clock. This is 3 o'clock. So here is 3 o'clock. This candle open is at 3 o'clock. So if you look at the movement from there all the way up to here to where it went down here, is there any sort of momentum? No, there isn't. Right? There is no momentum. There's nothing here. But if you choose to say, all right, I'm going to go ahead and sell US dollar CAD, all you got to do is to say, click, sell. It executes a trade. It's going to manage your position, and it's going to do everything it needs to do in order to be able to keep that. It tells you where your break-even point is. It tells you the pips that you've got. It tells you your loss, profit, and loss right here. And then you can go ahead and make a decision. Hey, do I want to close out that position? Do I want to hold on to that position? You can make that decision however you want. And also what you can do is you can go back to your buyers and confirm it on your buyers and say, hey, listen here, if I get the US dollar CAD to confirm a bearish bias, I might just get the heck out of Dodge. Now, let's take a look at another example right here. Here is another example where we're looking at the Smart Entry AI, and the Smart Entry AI is telling us that the Aussie New Zealand dollar is in a bullish bias. And the bullish bias tells us that we have one trade in. It tells us the break-even point is at 10.49. Now, 10.49, it also tells me that the entry point came at this time. This is a broker time right here. So this was 11 o'clock in the morning, broker time. Take 7 hours off that, and you get 4 o'clock. So at 4 o'clock in the morning, this morning, you can see there the 7th. This is when the trade was executed. But now look at the entry point, 10.49, right? So what you can do is you can go here and say, all right, 10.49 on the Aussie New Zealand dollar. It says that we have a bullish bias, right? So the market's bullish. And unless the bias changes, and you can see right here, we do have a bullish bias, all right? So if we've got a bullish bias, then traders, what we really want to do is we want to go down to the 30-minute time frame and say, all right, I want to trade going long. Now, I can just go ahead and simply enter the market because, you know what, look at the entry point. Entry point was at, let's see the entry point again. Entry point is at 10.49, right? So let's go back here. Where's 10.49? Well, 10.49 is slightly lower. So I can look at this and go, all right, you know what? I'm going to wait for this to come down a little lower because I do see that there is an opportunity here. I see that there is a order block sitting over here. Price is going to come back to tap into that order block. We saw the market created this. Here we had here's an order block sitting over here. Sorry, breaker block sitting over here. So we have an order block. We have a breaker block. We have a fair value gap sitting over here as well. So we know that the market is going to come down. Now, anytime the market creates these bullish PD rays, what market tends to do is use that as support and then go back up north. So what we want to do is to say simply, let's go ahead and buy on this pair. So if I go to my, let's go over here. If I go to the Aussie, I'm going to go ahead and mark this off here. I'm going to go Aussie, New Zealand dollar. All right. So I've put this, I've put that system on the Aussie New Zealand dollar, and I'm going to change my setting over here to, let's go ahead and use, I'm going to use the trio setting here. And if I go to the trio, do I see any trades here on the trio? No, it doesn't look like I got anything on the trio. Let's see if I've got anything on the, I'm going to go to the Dow hedge. Just go to the hedge. Do you have any trades on the hedge? They didn't know. Oh, let's do this. Let's do this. Let's change this to, let's do, change that. Sorry, I'm going to go and change this right here to my max. And I'm going to change the gain. I'm going to change it to Aussie, New Zealand dollar. All right, there we go. So I got this one set up right here, Aussie, New Zealand dollar. I've changed this to our max. This is another signal coming through right here. Shows that I've got bullish. I've got a bearish setup right here, 6. Bullish right here. So the bias is bullish. So if I choose to want to go ahead and enter this trade, all I got to do is go ahead and simply click the buy and enter. Now, there's a couple of filters that we've put in here. But if I put a buy in here, if I've added the filters in, it's going to say, well, we're not ready yet. We're not ready to go buy now. We want to confirm certain things first. First, we want to confirm that we actually have the master status to be bullish. We want to confirm that we actually have an entry. Now, I can switch off a couple of the signals. So as an example right here, I can say that I want to trade the bias. I don't want to use a lower time frame execution. I'm not in, I want to go ahead and not use the signal of the actual master account. And I'm going to go ahead and shut that off. Then I'm going to reset this and boom, it's in. So there's the trade, buy. So if I choose to filter the trade that I don't have all these filters, I can do that. The filters are there to help you to be able to make a decision to say, hey, listen here, I want to only trade if the market is confirmed in the direction of the master account. So if the master account shows us that we have a bearish signal, and by the way, traders, this would be the last signal that is being confirmed. If the master account confirms that we now have a bullish signal, then it would enter the trade if I use the filters. If I don't use the filters, I will not have any of those entry points in. Now, traders, the session is not to give you guys a full breakdown on the system and how it works. We've got a special session happening. Cameron's going to be running a special session at 1 o'clock today for all members. All members will get access to this information, how it works, all the filters, all the things that they need in order to be able to use it. But to give you guys a high-level sort of outlook of how this works is very simple. This works on any currency pair. It works on any currency pair. It works on, obviously, the pairs that we are focused on. But more importantly, traders, what this does, it gives traders now the option to look for the bias and trade only in the direction of the bias, number one. Number two, if the bias changes on the higher time frame, there is a function here whereby you will exit the trade. So if you choose to enable that option, to say, listen here, if the bias of the larger time frame changes, I want to be out of my positions. Liquidate that position, get me out. I don't care. I want out of that trade, which means that if you're looking at, let's say, for instance, as an example, if you're looking at trading this bias, right? Let's say you get in on this candle, all right, based on this bias being bullish, and the market ends up going south right here, and we end up changing market direction, and the bias changes. You're going to say, big dog, I want out of that position, cut me loose so I can go ahead and trade in the opposite direction. Now, where would it have helped us on the US dollar CAD for those traders that have traded the US dollar CAD? Where would this help you as a trader? Well, let me go ahead and show you here on our chart here as I look at US dollar, and I'm going to go to US dollar right here. Yes, US dollar. Let's go to the weekly chart right here. Now, traders, for those that were stuck in like I am on the US dollar CAD, here is the bias change. If we look over here, down here below, this is where we got caught in the sell position. And the market went north and it never came back. And we've entered in all these positions as we continue to monitor the market. Now, where would the bias help us? Right here, when price goes ahead and confirms that we have a change in bias. Now, the weekly bias went bearish here. All right, so this was a bearish bias here. So as the market changes bias here, that confirmed that we're now moving north. Now, if you cut your losses at this point and rode the wave up, you would have made all this profit going north. What's great about the system, the Smart Entry AI, is that you can also go ahead and say, hey, this market is aggressively bullish. We're looking for price to move towards an external high or low. So what you could do is you could also trail the market based on the bias. So as long as the bias stays bullish, you can keep moving up your cut loose sort of stop loss, and trail the market as the market goes further and further up. So let me give you a couple of examples of what it looks like here. Let's run a couple of tests here, and I'm going to show you what this looks like. And I'm going to run this in a slow sort of fashion so that you can get an idea of what this looks like. All right, so here we go. So I'm going to run it on the pound US dollar right here. And this is how the system works, or it's going to work for you. So as you take a look over here, the system's just running, right? It's just running. Now, here is the thing. Let's ignore the master status for right now, because this is a back test, so this is not going to work in real time. But let's just look at the bias. So currently right now it says bullish bias. Okay. Now, if it says bullish bias, what we're going to do is we're simply going to go ahead and buy it. All right. So let's go ahead and buy. Buy. What is the bias? It says bullish. Let's buy. All right. We're out. What does the bias says? It's bullish. Let's buy. All right. We're out. Oh, it's the bias remains bullish. Let's buy. Now, traders, notice that a couple of things here. Notice when I click, sometimes it says reset. That's because it's waiting for additional confirmation. So I can add in filters into the system that it'll wait for the market to actually confirm that the bias on the lower time frame is also confirmed in that direction. So if I go again and say buy, notice that did you see that status? It says sometimes it puts me straight in, sometimes it says wait. Bullish is bias. Let's continue to buy. Let's continue to buy. All right. And so if you look over here, this is the profit that we're generating right here. Now we're gonna hold on. We got 8 positions in. Bias remains bullish. Okay, we still profit. We're good. All right. So you can decide. Now check this out. If I decide to sell, check this out. If I decide to sell, it's going to say reset. Why? Because the bias is bullish. It says no. The filter that I've chosen to say that if the market is bullish, don't put me in the trade if it's bearish. So what it's doing is it's avoiding you from getting in the wrong direction. So if the bias is bullish, then don't push that sell trade. Now I can switch it off. I can make a decision and say, hey, I don't want to trade with that function. So I can switch off the function right here, and I can say, hey, listen here, I don't care about the lower time frame anymore. I don't care about the range anymore. I don't care about the trading inside we'll talk about that later, but I don't care about that. If I go ahead and execute now, check this out. Now I can make a decision to say, I don't care about where the bias is going. I'm simply going to go ahead and trade whatever direction I want to trade in. So I'm going to go ahead and say, hey, if I want to sell, I can sell. If I want to sell, I'm going to sell. You might not be in the direction of the bias, but if I choose to sell against the bias, I can do that. If I decide, no, hang on, I'm going to go with the bias, I'm going to buy now, I can trade in the bias. So you can put filters in that could either limit you to trading against the bias or actually help you to trade in the direction of the bias. And also, traders, if the market goes against you, then yes, it will get to a point where it say it's time to liquidate and close out positions and now look to trade in the opposite direction. So which means it protects you from trading against the bias. And if you are trading against the bias, if the market direction once again confirms that there's a change in bias, as an example here, if we decide that we are going to trade against this bias, let's say the bias is bullish, and we decide to sell here, and price goes ahead and takes out this high right here, whatever sell positions you have, you can get this to exit the trades, get out of the trade, and now only look to continue to buy. So traders, you have a lot more protection as to what you can and cannot do. Now, here is the situation here. This is the situation right here. You'll notice our website has changed. Traders Network Club website has changed. One thing I'm going to go ahead and point out right here, and we do this a lot, our brokers. Both our brokers, SCM and ACAP, are covering all costs of traders that want to connect to our systems. All right. If you want to connect to the systems, open up a live trading account with one of these brokers. Use the broker link here on the website, and you will get access to our systems absolutely zero cost. All right. Now, obviously, there's a process. We'll go through the process. We'll help you with the process. But once you get your account set up or you have a live account of $10,000 or more, you can get up to 12 months of free access to the systems, no cost to you. And so what we've got is we negotiate with these brokers to get them to carry the cost for you so that you can get into the system and grow your account and get the best potential. All right. So if those traders are excited about that, that's fantastic. Now, we have 3 packages here, right? We've got the Navigator Pro, we've got the Wealth Flow, we've got Optimal Traders. These are the 3 packages. Look over here. We've got the EA, the system, the Smart Entry AI tool. We've got the Dow DAX remote dashboard. We've even got the MMXM strategy, where Cameron talks about how to be able to identify buy models, sell models, so that you understand that if the bias is bullish and we have a potential downside move for a distribution move, you can actually go ahead and trade it because you understand a little bit more about the bias of where the market's going based on the buy model and sell model. You get the trade signals. We're calling them the market chaser. Market chaser is the old Pip Hunter, with the exception that now we cut our losses. All right, we don't hold on to these long-term trades. You should never hold on. Well, in fact, you will never hold on to a trade for longer than 1 month. All right, that's the longest you'll ever. You might have early exits, but for no longer than a month, you should hold on to a trade, specifically if it's going against you. All right. Weekly updates. Get weekly updates in the Discord channel. Weekly updates, which is telling you about the buyers, whether we're holding, whether we can, whether we see a market structure shift. All the weekly biases, or at least market analysis, will be posted in the Discord channel on a weekly and on a monthly basis. Weekly and monthly, because the weekly closes are important and the monthly closes are important as well. Then also the members Discord. You'll be getting access to the members Discord. Traders, right now, you can get 14-day free trial. 14 days. If you don't like it, cancel. 14 days. Check it out. For 14 days, you'll be able to use the Smart Entry AI tool, connect for 14 days, and then you decide. Don't pay up anything. Don't need to pay up anything in 14 days. Try it out. See if it works for you. All right. Gives you full information, full sort of exposure as to where the trade is, where the bias is. See if it helps you. Try it out for 14 days. There it is. Click more to get more access. Here we go. Wealth Flow. Wealth Flow is our trade replicators. All right. We've got 3 automated systems for 197. 3 automated systems. In fact, sorry, it starts at 197. We'll go ahead and click more here. If you click more right here, it'll go to the website. You'll see that we offer 3 different systems here. And these systems are based on the trifactor, the hedge finder, and the market chaser. So just an example, the trifactor is the trio. The hedge is the hedge strategy. And the market chaser is, of course, the old Pip Hunter. Except, with the exception, traders, each one of these systems does come with a max hold of positions, which means that there is going to be a cutoff at the end of the month if the market does not move in our favor. After a month, if the bias changes, these new systems, the trifactor, the hedge finder, as well as the market chaser, all 3 of them have a cutoff where they will cut off and they will not go ahead and trade. Now, I'm going to show you a little bit of a kicker. All right, check this out. Inside the Smart Entry AI is the option to upgrade to our Smart Entry bot. What is that? That's actually giving you all the different signals, the trifactor, the hedge finder, the market chaser, all right, as well as the Dow, all included in the Smart Entry AI that you can go ahead and use to be able to identify all the biases on all 28 currency pairs. All right, you can go ahead and trade all 28 currency pairs. So if you want to trade as an example, if you wanted to trade the pound, JPY as an example here, let's go to it here and show you here. So here, so if I change this, let me go ahead and close this out. So if I change this to the pound JPY, so if I put this on the pound JPY chart, here it is right here. Okay, tells me what the bias is. The bias is bullish. All right, pound JPY, it says the bias is bullish, but we have 4 entry points that the master account has gone ahead and sold on. All right, that's the latest signal. Now, traders, if this signal changes, if we get a buy signal on the pound JPY, it'll go ahead and put a buy in. So you can go ahead and say, you know what, I'm going to trade in the direction of I'm going to go ahead and activate this all. I'm going to use all my filters, and I'm going to go ahead and trade bullish. Now, what it's going to do is it's going to say, all right, as soon as the master account confirms bullish, it'll go ahead and fire a trade. So now it's saying, all right, cool. You trade in the direction of the bias? No problem. Let's do that. Now, here's another thing. The bot. This is the AI bot. You can also use the bot to actually trade it automatically. So what you can do is you can go and activate this with all the signals, or all the filters. Go ahead and press OK. Now this Smart Entry AI bot is going to trade when all the signals are in line. So you don't have to do anything. Just add on to the chart and it'll do everything for you, which means that if you got the pound JPY, it'll just simply go ahead and trade the pound JPY if the bias is bullish and the master account also is bullish. It'll enter the trade at the next signal. You don't have to do anything. It'll automatically do that for you. Again, all the information is going to be revealed to our students in the live session at 1 o'clock today. And so Karen will be running that session. Now, traders, now that we've covered that, you've come here for some updates on the Euro US dollar and the US dollar CAD. Let's go ahead and dig into some market analysis here. All right. Now, US dollar CAD, let's jump into that first. Cameron, we all know that that we've got the Prime Minister of Canada that's resigning. Is waiting for the new person to get nominated. So we waiting for that to happen before he steps down. But he's confirmed that he's resigning. But he's just waiting for the next person to so that they allocate that's going to take his position, and then he's going to step down. That's good news for the Canadians, right? So that's good news for the Canadians. So which means, and why is it good news? Well, it's the same thing here in the U.S., right? In the U.S., we had Biden that was absolutely destroying this country. Every decision that he made, I mean, even still today, after the elections, his last final days, he's just making some really dumb decisions. All right. But in any case, be it as it may, the markets are seeing the same thing happening in Canada. Justin Trudeau is just absolutely screwing up the Canadian market. There's just so many things so wrong. I'm not going to go to the details. So wrong that what he's doing, and so the investors are excited about a new change in leadership, and so this is a good thing for the Canadians. All right, it means that they're going to do what they should be doing and become a oil producing country, which they are, but actually produce oil more than what they import oil. Right now, Canada's importing more oil, the same as the US. They're importing more oil than they're actually producing. That's ridiculous. As a oil-producing country, that should not be the case. That's how stupid the Prime Minister has been around the things that the decisions they've been making. Now, if we look over here on the US dollar CAD, we're starting to see a turnaround. Now, I've already mentioned, traders, by looking at our bias, right? Our bias currently right now on the US dollar CAD right here, you can see right here, is still bullish, right? It's still bullish. And the reason why is because our weekly time frame has not confirmed the break below this previous low at 42.12. Now, our daily time frame, as we mentioned, has given us some sort of indication, all right? I'd like to have seen the market displaced below this low right here, though, all right? We don't see that, but I'd like to see a displacement below 4,300. If we close today below 4,300, I'll be more excited about selling on a US dollar CAD. As you can see right here, our last signal on US dollar CAD, based on the new setting, has actually been looking for a long on US dollar CAD. Here it is. 43.38 is the break even, and we've got 3 positions in right here. So if you look at this, if I go ahead and enlarge it, you can see there it is. All right. So you can see our positions are holding here. All right. There are 3 positions there. And so our break-even point is at this area here at 43.38. We're getting close to that at the moment right now. So there's going to be we're going to probably take some profit on this trade right here. Now, the thing here is that I look at this and I go, traders, we're still inside this range. See that? We're still holding inside this range. So for those like myself that are holding on to some sell positions on the US dollar CAD, should I be making a decision to cut loose on this, or should I continue to hold? Well, traders, obviously I'm going to continue to hold. That's my strategy. It's always been my strategy. But would I be adding into new positions at this point in time? No. I'm definitely waiting for the market to confirm a bearish bias. Once we confirm the bearish bias, then yes, I would be looking to go ahead and sell. Now, if there are some buy signals, traders could take advantage of those buys. All right. So if you're trading, and that's the beauty of trading a hedge, the hedge strategy, right? The hedge strategy gives you buy and sell. So even though the market is showing a bearish bias, all right, a bullish bias, you have the choice of trading the bearish signals and the bullish signals. You can make a decision on that, all right? And we'll show you how to do that with the members. But what we want to do here, traders, is that we also want to look at this and say, you know, based on this setup, based on the setup, how can I look for early turnaround? So here is the 4 hour, right? If you look at the 4 hour, we did break below this order block. So we are seeing a little bit of confirmation that the market's pushing lower. Not enough yet, but it's given us some confirmation. Now, I don't want to get a little bit more. I want to give Cameron an opportunity here, all right? Because Cameron's got a very good sort of market view around buy models and sell models. So I want Cameron to get I want to use Cameron as additional confirmation. So Cam, go ahead and break down the US dollar CAD right here and give the traders a little bit more idea of what are you looking for on the US dollar CAD.
Okay. All right. Good morning, everyone. Happy New Year, by the way. Good to have you guys back here.
And I've been speaking all the time and haven't given Cameron a chance in the last 40 minutes.
All right. So here's the USD CAD. And first thing I realized when I looked at the chart is we had an accumulation and we had a run to the downside of these lows. So my first reaction is, okay, we're accumulated. This could be a manipulation. Why would this be a manipulation? Why would we run lower? This could be a retail trap, meaning that we have areas of support right here. And we have retail traders thinking we're breaking out. So this is a retail trap trying to bring the retail traders to sell at this area. What's that?
Inducement.
Yeah. And that is causing for more selling pressure down below at this area of support, which we think now is going to be broken through, retesting this area, causing more engineered sell side liquidity to for the retail traders to continue to sell. So I think what we're going to see is, because we have these relative equal highs above here that are still intact. You notice that price came up here and never swept this high. And what this is engineered buy side liquidity. And if we're continuing to stay bullish, this would be a manipulation to bring those retail traders into the market and sell at this area, which then gets manipulated to then push price higher. And look at all these new day and new week opening gaps above here. These are key areas that price will gravitate to. So I think this could be a manipulation. I'd like to see if we made an attempt to this new week opening gap here. Do we make that attempt? No. And what I know is down below, everything looks pretty jagged down below here. If you go to the daily, you go to the 4 hour, you go to the 1 hour, all this right here looks pretty jagged. Okay. So what I think is, looking at the 4 hour, this high right here, we're going to make an attempt to run above this new day opening gap of today's opening, this green line right here. We're going to run through this. I think we're making an attempt to run through all this, and this candle right here, this order block, this up close candle, this will be a key area that where price will confirm once we run through that we're now breaking structure to the upside.
So just a quick one here, guys. So Cameron's saying that, hey, what did we say? A bias is still bullish. All right. Bias remains bullish. So as much as we would like to see the market drop back down, the bias is still bullish. We don't see a change in bias. And while the bias is still bullish, there's still going to be a run of these levels that the market's going to try and chase after. But Cameron, let's look at the what is it that you're going to look for that's going to confirm that maybe we could go down further?
Well, first I want to see buy side swept. So this right here, these relative equal highs, this is an area that price will gravitate to. This is resting liquidity in the market. That price, I would want to see this get taken. I want to see this get disrupted first before I see it want to reverse lower.
Okay. But if the market sells off, right, at what point are you going to say that, okay, we're heading for a different target than the buy side? Look, buy side is holding a lot of the liquidity up at the top there, right? I get that point. But at some point, if the market continues to drop back south, right, could this be a deeper manipulation move before we get buy side sweep?
Yeah, so if there is a reason that price doesn't want to come back up here, what I'd be looking for is this these bullish PD rays on the left side here to be disrespected, and I would want to see price continue to break structure lower. So this low that we create, these lows right here, if we can break below that low and then look on the left side here at some sort of discount array, which would be this higher time frame fair value gap here on the daily, if we can see price run through that, then we can make more of an attempt to run lower.
Okay. By the way, Juliet asked the question early on: Can I continue to use my own broker? You can use what broker you want to. I'm just saying, if you use our brokers, our preferred brokers, you will be able to get our systems automatically for free. If you want to use your own broker, no problem. You can use your own broker. We're not restricting anyone to use certain brokers. So use your own broker. But if you want to get a discount on not paying for the monthly subscriptions, then go ahead and use our brokers. All right. So PD array is very important. When Cameron talks about PD arrays, he's talking about all these bullish order blocks, bullish fair value gaps. Those are bullish PD arrays. He wants those to be disrespected. Now, when he says that, what he means is he needs the market to trade below those, because think about it as support and resistance, right? All these PD arrays are acting as support and resistance. If the market breaks below those areas, then those what was bullish PD arrays now becomes inverted like resistance, right? Because now it becomes an area where the market's now going to stay below and start heading further down south. So it starts chasing after more liquidity, maybe more PD arrays down further down south. So basically what he's saying is that you've got support and resistance here. If the market respects the support, it's going to continue to move north. If it disrespects support, it's going to trade below that. And that support's now going to become resistance as the market continues to chase after some deeper targets. So which means that there's going to be a draw of liquidity to the downside, maybe just in the short term, before the market starts to turn around and heading back up north. But Cameron's made it very clear. That is, he would prefer to see the market sweep the highs up here buy side before the market goes back down south. I'm just saying that, okay, that's a possibility. But with everything happening in Canada, and with the U.S. Change of leadership happened on the 20th of January, I'm saying that we're probably going to see the market push down lower before we go back up. I see the buy side certainly coming into play, but that's why I asked Cameron, what is it that you're looking for that confirms that the market's going to go bearish? Now, if you're using our systems, and you'll see that our system will confirm that we have a bearish bias or a bullish bias. That's going to be your confirmation. If it's a bearish bias, traders, all day long, we're going to start adding to our position. So any position that we've got that we are selling already, if I get a bearish bias, I'm going to look for every bearish opportunity to go add on to my positions and see if I can sell it and make more money to the downside while the market is moving down. Because Cameron's right. The market's always going to be looking for this. Well, the market has four reasons to move. Looks to hunt for liquidity, create liquidity, rebalance insufficiency, and rebalance equilibrium. Those are the four reasons why the market will move. So Cameron's saying here, the reason why the market will move to the buy side is because it's hunting for liquidity. All the buy side liquidity sitting over there. But at the same time, it's looking to rebalance insufficiency as it moves further down. So the insufficiency below the market is going to be, and the order blocks are going to be where the market's trying to rebalance insufficiency or rebalance equilibrium as it starts coming further down south. So there is chance of price moving down, and if it does, we have to see it disrespect those order blocks. All right, Cameron. Let's take a look at the euro US dollar quickly here. Give us a little bit of a breakdown on euro US dollar. We've got and traders. Yeah. I'm going to let Cameron continue. I've got a live session I've got to get into. This is what I want to end up here. Cameron's going to break down the euro US dollar, give you guys a good view of the euro US dollar. But this is the thing I want to leave you guys with. Number one is that the markets, there are multiple ways to trade the market. All we have to really understand is which direction we're going to trade, whether we're on a risk-on, risk-off trading environment, whether we are in a bullish or bearish bias. And then, of course, the most important thing, traders, is how do I manage my risk? Now, in the past, we held onto positions long times. We kept it. Now, we are now made changes to a risk management approach where we now have areas where we can now liquidate, get out of our positions, reposition yourself, so it will avoid traders from blowing up their trading account, getting overexposed in the market, because now you've gone ahead and limited yourself to what you're going to be able to expose yourself to. The systems that we're giving out, the systems that you're going to get able to get access to, the Hedge Finder, the Trio. These systems have produced anywhere between 3 to 5% monthly. And now we get a chance to go ahead and cut loose all the long-term holds as well. So now you can get into these positions, have multiple positions, multiple trade opportunities. We're giving you multiple trade opportunities, and we're limiting your risk on the downside as well. So traders, check out the website, Traders Network Club. Check out the membership area. Go ahead and sign up for a 14-day trial. Look for the Navigation Pro. Sign up for a 14-day trial. Check it out if you like it. If you want more automation, or at least automation upgrade to the smart entry bot, but also traders, if you want to go ahead and get a replicator connected to your account, go ahead and check out Wellflow. And then don't forget, Optimal Traders. Optimal Traders membership is about futures trading. Cameron's going to go ahead and have live sessions. It's going to talk you through different types of trading approaches of how to trade futures for intraday profits. Traders, you can start off with as little as $1,000 in that trading account. Cameron's going to show you how to manage that. So with that being said, Cameron, I'm going to hand it over to you, my friend.
All right. Thank you. All right. The EURUSD. Let's take a look at this one. Let's break it down. So looking at the weekly, we can see that prices come back, taking out this weekly low. What does it continue to do? It's continue to run lower into where? Insufficiency of this weekly gap right here. So what we're probably going to see is price make an attempt to run to this order block, then make an attempt to run lower to consequent encroachment of this gap, okay? Now, what I want to see, if I want to continue to stay bullish, is I want to see the upper quadrant of this weekly insufficiency. So that upper quadrant, when I mean upper quadrant, I mean the upper point from the midpoint to the high, okay? I'd like to see the lower quadrant, okay, from the midpoint to the low. I'd like to see that stay unfilled, meaning that price doesn't trade to this area. It can trade in this area, but if I see price trade lower to make an attempt to run to this low, that would indicate to me that we're pretty weak and price is going to continue to run, possibly continue to run lower, okay, to more sell side liquidity. So what I want to see in the EURUSD is, yes, it can come and trade into this upper quadrant, whatever it is. The wick can maybe come lower, but as long as the body is respecting that midpoint and we continue to trade above it. So that's what I'm looking for here. If I go to the daily, what I notice is we have the sell side imbalance here that was respected. See the bodies of the candles never trade above that midpoint, and we came back to re-tap into this. So this could possibly be, this could possibly be price retesting the sell side balance to continue to run lower here. Okay, so I think there's an opportunity that we're gonna make an attempt to run lower here on the EURUSD. And if we don't, then we should see price run above this sell side balance and continue to run above some highs here, showing us some strength in the market. But as of what I'm thinking, what I'm seeing here is that price comes back to retest this sell side balance because we never got a run above this consequent encroachment. So the algorithm is telling us we're running sell side. It's pretty weak. So that means that we coming back to retest this sell side imbalance, okay, and could possibly drop lower. So we'll use this as inversion, okay, this insufficiency here once this candle closes. This will be used as an inversion. Now this is the daily candle, so maybe we don't get a run today. You can see in the 4-hour we're accumulating, starting to accumulate a little bit. So I think there's going to be a possibly more weaker move on the EURUSD. So I think we're going to run lower, guys. We'll keep an eye on the sell side balance. If we can't run above this, then that would indicate a little bit more strength in the market. But right now it's looking pretty weak. The one thing I do like about the weekly is that we have these relative equal highs intact. Okay, this could be an area that price could want to draw back to. That would first be determined on how we trade into this insufficiency and how we respect the upper quadrant, or at least respect the lower quadrant and not trade below that. Okay. All right, so that's pretty much it there on the EURUSD. We'll keep an eye and see how price treats the sell side balance, which I'm anticipating. Again, it's just a retest. Okay, just retesting this. Price is just referring back to this insufficiency to continue to run lower. So we'll see how that plays out. I know Big Dog mentioned at was it 1 o'clock or 1:30? One of those times we'll have it announced in the Discord. We have another session for the members only. Okay, so that will be kind of going through the transition of moving you guys to the memberships, the new memberships, and kind of helping you through that process. Okay, so that will be, I believe it's 1 or 1:30, but we'll announce in the Discord, and we'll make sure that everyone's in that session so we can make sure that transition is smoothly. Okay, so with that being said, guys, enjoy the rest of your day. We'll hope to see you guys very soon. And I'll see the rest of you guys, the members. I'll see you guys at about 1 o'clock, 1:30. I'll let you know the exact time. Okay. So enjoy your day. Take care.